Hi everyone, Joe Vitale, American Retirement Advisors with the Gradient Investments weekly talking points for the week ending February 18th, 2022. Sorry I was out of town last week. I was at the Ed Slott Advanced IRA and Tax Strategy Training in Orlando for a couple days. So wanted to make sure I brought some good information back and help everybody with our tax strategies. But we're kind of in for a wild ride with the market these days, aren't we? So let's get into what we got going on. The markets are closed today for President's Day. But let's talk about last week for the week ending on Friday. The major indices were down across the board with the benchmark S&P down 1.52%, Russell was down 1%, and the NASDAQ declined 1.73%. Now overseas, the developed markets, which was the EFA, dropped 1.86%, as the emerging markets lost 0.67%. Within the U.S., staples and materials were the best performing sectors, while energy and communication sector were the worst performers. By style, value outperformed growth. So fixed interest, the 10-year Treasury increased interest rate was unchanged for the week at 1.92%. While the fears of rising interest rates continue, tensions in Eastern Europe are driving more foreign investors into safer countries, primarily the U.S. Also notable is the interest rate on the 10-year German bonds, which are now at 0.2% versus negative 0.18% at the start of the year. It has been negative for most of the past 3 years. Commodities, U.S. crude inventories rose 1.1 million barrels for the prior week, far ahead of the consensus estimate for a rise of 200,000 barrels. U.S. crude oil inventories are about 10% below the 5-year average for this time of year, and the price of West Texas crude finished up the week at $91.07 per barrel, down 2.18% for the week. Economic data, producer prices for January rose 1% month over month, double the consensus estimate, and sharply accelerating from 0.4% in the previous month. On an annual basis, it rose 9.7% in line with the December readings. Now, the ex-volatile food and energy core prices increased 0.9% for the December, or 6.9% over a year-over-year basis. U.S. retail and food service sales rebounded in January, rising 3.8% from December, nearly double the consensus estimate, although the prior month's data was revised down. Now, on a year-over-year basis, the index rose 13%. Notably, restaurant sales were up 27% on a year-over-year basis. Industrial production rose 1.4% in January, well ahead of the consensus estimate of 0.5% gain after a 1.1% decline in December. Now, capacity utilization were also stronger than expected, rising the strongest level since early 2019. Now, it's kind of something that we talk about. Everybody's wondering that the market is going to crash. We're having a lot of volatility with Europe, with Russia, with Ukraine, and everything that's going on. It's very scary with the inflation, with everything going up. But as you see, with the industrials and the pent-up demand, there is still so much expansion going on, which is why everybody says, Joe, we're crashing. Who knows? Nobody's got the crystal ball. But we're still seeing expansion. We're still seeing big companies. We're still seeing profits. We're still seeing earnings. So on the fundamentals, we should still have a decent year. Who knows what's going to happen? But this is why we have to keep our heads, because anytime we get our emotions involved in it, that's when things go south really fast. So we just got to make sure we have enough cash coming in. This is why we get allocated the right way. This is why we have our safe money, our growth money, our tax-free buckets, right? Our tax-deferred, no risk. That's why we allocate a certain way. If we've got everything in the market, now we got issues, okay? So we have to make sure we got it done the right way. Let's talk about company news. Equinix, which is a G50 core select and contrarian choice holding, stock rose 3.9% last week, following the reports of revenue and earnings that firmly beat expectations. Bookings for this data center REIT were at a new record. Fidelity National Information Services, which is a G50 holding, management guidance for a full year in line with consensus expectations, but the current quarter's earnings declined, so growth for the full year are expected to be back-end loaded, along with other legacy financial technical companies. The stock has suffered, so it declined last week by 14.5%. So remember, that's it for now. We've seen all this before. Make sure we stay properly allocated, make sure we keep our heads, make sure we don't let our emotions get the better of us, because that's where we make mistakes. We do have safer alternatives. We have some buffered indexes we talk about. We have some mitigation. So if ever you feel that we need to have a talk even more than we normally do, or we have to move your tolerances have changed, let's just make sure that we keep in line with your expectations and your risk factor. But let's not let our emotions get the better of us, and make sure that we're in good shape there. That's it for the week. If you have any questions, of course, give us a call at 855-756-5700. Visit us online at aradvisorsinc.com. Make sure to visit our Facebook and YouTube pages and scan the QR code at the end of this video to subscribe to our newsletter if you're not already. God bless you. Thank you for watching. We'll see you again next week.